Hi there, and welcome to our segment, Cut Through the Noise, where today we answer your questions that we've been hearing throughout the month. Today we're talking about carnage in the bond markets, rising mortgage rates, investing in real assets, and what to do with your tax refund. Stay tuned. Hi there, it's Alex and Anthony from One Degree Advisors. If you enjoyed today's content, please like and subscribe for more. Anthony, let's get into it. So bonds have been having a really tough time the past several weeks.
Tough month. The worst month in 42 years, March here of 2022. And it's tough because stocks, for the most part, have gone down year to date as well. So investors have taken a hit on both sides.
Yeah, Jim Bianco put out a pretty interesting tweet, which we'll post right now, just showing the carnage in the bond markets. He said, if today was the end of the month, and he posted this on March 25th, March would have been the worst total return month in over 42 years. I mean, this is tough because, you think about a classic retiree and they go into retirement or they're preparing for retirement. I mean, bonds is the staple. Bonds is where people go to generate some yield, create some safety, and create some income. And here we are having one of the worst months in a really long time.
Right. So that's the question people are asking is, should I still own bonds, right? And we think people should, but there's also other ways to manage risk, whether it's a tactical risk management strategy, having some cash on the side, and being well diversified overall.
Yeah, no, it's tough. I mean, there's no easy answer, but at the same time, there is no free lunch.
Right.
People are like, well, what else is out there where the same risk profile as bonds, but I can get some great returns. It isn't always like that.
All right, so next thing, mortgage rates on the rise. Mortgages have shot above 4% for the first time since 2019.
Yeah, so let's pull up this chart real quick. This is from Coifin. This is going from, looks like March of 2019 to March of this year. Yeah, I mean, breaking up almost to 4.5%. The thing is, when I look at this, it's still relatively low compared to history. So yeah, of course, in the past 3 years, it looks like it's shooting up really high. Things are still pretty low, but I don't know. When you look at mortgages versus like what a $600,000 home, just as an example, good luck finding something for $600K in San Diego.
Right.
But if you look at the price or the cost of that mortgage of like a 2.75% mortgage rate versus 4.5%, I mean, it's a night and day difference. Right. So I don't know where people are just going to magically start coming up with all this money. There's this thought, it's just all supply and demand. I don't know. I think rates are going to go up and prices are probably going to come down. That's just my hunch.
So will we see a frenzy of buyers that are looking to get in before they go up further, or has the increase already slowed things down?
I mean, I don't know, probably initially, but here's the thing is you think about all these people that have refinanced into super low mortgage rates, right? 2.25, 2.5. Unless they're going to be staying there for a long time, what's the mortgage rate going to be like in 5 to 10 years from now when they move? Yeah. So I think this is going to create potentially a real big issue where people are just not going to move. They've locked in an incredibly low mortgage rate. And if they move, right, they're going to be moving into a different house, but now their mortgage rate's a lot higher. Their monthly payment might go up. So I see that as a potential long-term issue where people are just not going to be moving because they got such a low rate right now.
Yeah, I'd be interested for those professionals that are watching in the mortgage and the real estate industry to comment on what they're seeing out there.
Yeah. All right. I've been seeing this a lot. Folks have been asking us about this, with inflation is as high as it is it time to invest in real assets? Because historically, and that's what you see a lot in the news. They'll say invest in real assets. I mean, I was seeing some articles in like Yahoo Finance. They're like, Elon Musk says invest in these 3 things. So it's out there. People are talking about it. I mean, how should people be thinking about investing in real assets?
Right. So when we're talking about real assets, it's real estate, commodities, precious metals, things like that. And they've done quite well. I mean, not everything exactly the same, but definitely on the commodity side, it's done well, over the last year as inflation's really taken off. Inflation, the last marker, 7.9%. Yeah. So really high right now.
Yeah. Now, the question is what's going to store value, right? Because not all real assets are exactly the same. I mean, you want to think strategically about what you're getting into. I mean, a lot of people love real estate, and real estate can be a great diversifier, but you and I both know, and you know very well from a lot of experience. I mean, sometimes when people get too heavy into real estate, they just end up, they feel a little trapped. And it doesn't say that real estate's bad, because it is good and it can be a part of a diversified portfolio. But I always want to caution people against like getting way too heavy into real estate, because then you're really locked in. You don't have a lot of flexibility. And then eventually when it does come time, or maybe you do need to sell to generate liquidity, right, you're looking down the barrel of a potential huge tax bill, unless you do it like a 1031 exchange.
Well, and with commodities too, I mean, they were in the downward trend for what, 10, 12 years before the most recent run up. So it's good to have that diversification, but to overly rely on them can be very fickle as an asset class.
Yeah, really cyclical, and it can really whipsaw you,
right,
investing in those. All right, last thing here. So what to do with your tax refund? I always have an issue with this phrase, tax refund. It's not a tax refund, it's a tax overpayment, right? People overpay taxes, and that's not necessarily a bad thing if it's forced savings, but what should people do with a tax refund if it comes in?
Yeah, I mean, everyone has to obviously think of their own situation, but really looking at productive uses of that money. I mean, if you think a vacation is needed for the family and that's how you're going to do it, then, you know, obviously make that decision as to what's best, but paying down debt, investing, giving, if that's a productive use of your money, and hopefully it is, impacting your community, all those types of decisions are, potential for that tax overpayment.
Yeah, I'd say the other thing too is just consider adjusting your withholding.
Yeah.
Right now, still pretty early in the year, you can adjust your withholding for the rest of the year. Also, being aware of any major life changes. I mean, I just had a conversation with a client the other day. The wife's going to stop working, and so that is going to impact their total income, but that can also impact their tax withholding, how much they need to withhold, et cetera. So that's something important to consider.
Yeah, because at the end of the day, it's an overpayment. The government's holding onto your money interest-free, and you could be doing something else with it throughout the month.
Yep. And now let us know what you think. Leave your thoughts in the comments below. And if you have ideas for future videos, we'd love to hear about it. If you enjoyed today's video, please like and subscribe for more. Thanks for watching.